Well, we need to talk housing crash one more time. I want to thank each and every one of you who sent me this article from Newsweek. Yes, Newsweek was interviewing Reventure Consulting, who has been calling for a housing crash for 5 years, perhaps. But it is interesting to look at what Reventure Consulting is doing, at least inside of this article. And I have to say, it appears pretty data driven, which is far better than some of the calls that I have seen over the last 4 or 5 years. So let's dig into what Newsweek had to say. Let's look at what was in the article. And most importantly, I want to ask you, my loyal audience, what do you see on the ground, right? These are not opinions, these are facts. So specifically, Reventure Consulting is highlighting that Phoenix, Arizona could be the next large metro market to see a 20% crash in home prices. Again, folks, what I think is in any single market, if it falls more than 10% in a 12-month period, that is a crash. Or if it falls 20% over a combination of years, that too can be called a crash. So again, if you are in Phoenix, if you have a buy box in Phoenix, I would love to hear what you see on the ground. According to Reventure Consulting and Nick, inventory in the Phoenix area is up 20% year on year, and frankly, highest since 2017. That is interesting because, again, obviously 2017 is multiple years before the pandemic. So, again, a large metro market with inventory above 2020 or 2019 is interesting. I agree. Does highlight that the Phoenix market is already down 6.9%. Let's call it 7% for easy math since the June peak. That June peak obviously was in 2022. So again, over the course of roughly 3 years, Phoenix is down 7%. I do not call that a crash. That is a slow trickle, perhaps. But again, Nick is calling for this to potentially get as big as 20%. So I'd love to see what you're seeing on the ground there. The biggest thing that I take away from the article is really the following. Nick, Reventure Consulting, is telling people, don't rush. Don't rush. You got plenty of time. Nick is saying that over the next 12 months, prices will get better and better and better. This is where I fundamentally disagree. Let's just say for a moment Nick is right. And to be clear, Nick hasn't been right a lot. But let's just pretend for a moment that Nick is right and Phoenix will ultimately see a bottom at 20%. According to Nick, what you should do is you should wait until you get there. Now, of course, I think that is crazy because what will happen if Phoenix market, real estate, economy all crater is we will see a quick slashing of interest rates to zero or near zero. You will see mortgage rates drop, and bingo bango, you will be once again in bidding wars. I strongly suggest, again, opposite of what Nick is saying, is buyers need to get aggressive in buyers markets. We are in a buyer's market. You should not wait until you're in a seller's market. That is some of the worst real estate advice I have ever heard. No, Mr. Buyer. You don't want to buy in a buyer's market. You want to buy in a seller's market. That's just bad advice. However, if Nick is out there calling for a 20% crash and we're already down 7, what would I do with that information? Well, I would write better offers. Again, in a buyer's market, you do not pay list price. You ask for seller credits. You get repairs done. You as a buyer call the shots. You don't wait for lower rates in a seller's market to come out of nowhere and once again leave you in the dust. No. You get a buy box. You look every day. You write disrespectful offers and shoot. Write offers 20% below list price. You don't need every deal. You won't get every deal. You only need one. So, again, thank you for sending me the Newsweek article. I like the data-driven approach from Nick at Reventure Consulting, but I strongly agree with his advice to be patient and wait. No. If you want to buy in Phoenix, if you're buy box in Phoenix and you think prices could go 20% down because Nick said so, then write those offers today. You only need one motivated seller to say yes. I strongly suggest that you, as a home buyer or a real estate investor, realize that buyers markets don't last long. They don't come around very often. And when they do, it is your job to be aggressive, disrespectful offers, and get yours. Some of the worst advice I could imagine is wait on the sidelines for 12 months. Sure, prices drop in Phoenix, whatever Nick says. And then out of nowhere, the economy gets stronger, the Fed starts printing money, and you are once again left on the sidelines holding a bag and getting nothing done. So again, please understand, I have no data on Phoenix. I read the article because about a dozen of you sent me the Newsweek article saying, look at what Nick is calling. So again, he could be right. Where I disagree with them is how you attack a buyer's market. So if you're in Phoenix, I want to hear from you. What are you seeing? Obviously, inventory is up. Are you seeing price drops? What is going on? I would love to hear about the Scottsdale, Phoenix markets. Let me know. Folks, it is Thursday. It also means we get the weekly unemployment claims number, and boy, did they jump. They jumped from an expected 225, right? Yep, 225, all the way to 241. Again, folks, we have been trending for weeks and weeks and months at about 220 to 225. This slight or this uptick bears watching, but it is nothing to overreact to. We will need at least a second and probably a third week to validate the trend is broken. I will remind you, it was about 5 or 6 months ago. We saw a weekly claims number spike to, I think it was 255, so even higher than this. And next week, right back to 220, 224. So again, this is a yellow flag. It's like, hey, pay attention. We may have found the escalator up, but we'll see next week. This could just be a dirty number. A couple of states could have not filed correctly because of Easter break. We just don't know. So again, let's see what happens next week. 241 is a bad number. Also, continuing claims. I don't know if you saw that, but continuing claims spiked to over 1.9 million. That is more concerning, in my opinion. But again, we will sit tight. We will wait for next week and the following week to get validation of a new trend, or it's just a 1 week data noise. Something I do want to highlight, you will see in the upper right-hand corner of the screen, we have a sponsor for the daily financial news. Yes, folks, Steadily. Landlord Insurance has decided to reach out to One Rental at a Time and ask to sponsor the daily financial news, which I thank them. Again, if you are a landlord, if you are thinking about becoming a landlord, Steadily is purpose-built for landlords. I would argue that every landlord should reach out to Steadily and get a quote, see how their current policies are going. If you're getting a cancellation or refuse to renew, reach out to Steadily. Also, if you are building a buy box and you are new in the business and you own nothing, lots of you reach out to me and say, hey, I want to know how much insurance costs. Great. Go to Steadily. It's online. You'll get a quote very quickly so you can fill out your models. Again, I put a link in the comments. I'll put a link as the only notes in the description below once this is posted. Again, give them a shot. See if they can get you better rates, better coverage. If not, no big deal. Again, Steadily's been a part of One Rental at a Time for about a year now. And I hear from the audience that about 50-50, about 50% of the people that give them a shot end up with better rates and better coverage. Seems like a good bet to me. Give them a shot. We did get inflation readings yesterday. PCE came down pretty significantly. Last month, PCE headline was 2.7. This month, 2.3. So a significant drop in inflation at the PCE level. Again, it was expected to be even better at 2.2. Did not quite get there. Core also came down. Last month was 3%, now 2.6. This is getting closer and closer to Fed's target of 2%. Don't know if you saw oil this morning, but oil is crashing again on the back of expected weaker demand. So again, very interesting. Don't know if you saw the news yesterday, but apparently, according to some news articles, the board of directors at Tesla have opened up the CEO search. Yes, looks like they might be looking to get a backup or replacement for Elon Musk. I will point out that according to Tesla this morning, that is a rumor. My experience in this says a couple of things: where there's smoke, there is fire. So maybe they are looking for a CEO, and maybe they will promote or whatever Elon to chairman of the board or executive consultant. Who knows? He's got a lot of companies going, and it would not shock me if Tesla went for a new CEO. Also, I guess it wouldn't shock me if this was a rumor that they wanted to start and then Elon Musk shut it down. Who knows? But typically where there's smoke, there is fire. We did get a lot of tech earnings yesterday. Meta blew it out, beat top line, beat bottom line. They did highlight that China retailers are reducing digital ad spend. I think we heard a lot of that from Snap earlier in the week as well. Microsoft beat top line and bottom line and raised guidance. Qualcomm beat top line, beat bottom line, but gave a light forecast. General Motors out and highlighting that tariffs are expected to lower their guidance by $5 billion. Yes, $5 billion. Consumer spending for March was up more than expected, was expected to be up 0.5%, 0.5. It was actually up 0.7. Again, this should not be a surprise to you because, again, consumers, businesses bought ahead of tariffs. This is becoming a broken record. March Q1 is a dirty quarter because of the buy ahead. It's actually, again, why Q1 GDP was negative, because we had a 40% spike in imports. Yeah, this is becoming very repetitive. Scott Bessent joins the club of begging the Fed to cut rates. Scott Bessent isn't just name dropping and name calling. He's actually using facts. Who knew you could use facts to tell the Fed to cut rates? What is Scott Bessent saying? Scott Bessent is saying, dude, the 2-year note is below the Fed funds rate. That is a signal that the market is telling the Fed to cut. If you don't know what that is all about, for the longest time, people like Scott and others have said the 2-year note is what drives Fed behavior. And if the 2-year note goes below Fed funds, that is a clear sign that rate cuts are needed. Got some article from Redfin saying home sellers are over asking their prices by 9%. Again, we are now seeing people talk about wish pricing. We've been talking about wish pricing on this channel for quite a while. But yes, according to Redfin, homes are selling for 9% below what they are originally listed for. Oh, I forgot another earnings. Robinhood beat top line, beat bottom line, and wow, repurchased $322 million worth of shares. And a interesting stat, average new customer transfers, right? So transfers into Robinhood are over $100,000. That is significant. People now are talking about Trump's next 100 days. Obviously, he just celebrated his 100 days in office. Lots of negative articles out there, but let's see what happens the next 100 days. According to Capital Economics chief economist, the next 100 days of Trump will be better for stocks. This is the story of the year. I've talked about for quite a while. The first 6 months in office were going to be noisy and painful, and boy, they sure have. But then once we start getting wins and we start getting agreements and we have a headway with China and Canada and Mexico and Europe, then we turn to tax cuts, we turn to deregulation, and the story gets better from there. According to, again, to Capital Economics chief economist, the next 100 days, we will see that pivot from noise and pain to something hopefully better. Looks like Amazon is significantly investing in small towns. Amazon is investing $4 billion in building out the last mile delivery network for small towns. Norwegian Cruise Line, kind of opposite of Royal Caribbean, says that Americans are hesitant to book longer European cruises. I would tell you that my favorite cruise was the Mediterranean, and frankly, my least favorite was the Baltic. I did not like the Baltic, partly because of the weather. But yeah, if you're going to go do a long European cruise and you haven't done one, the Mediterranean is just awesome. Lots of cool stuff. I want to congratulate somebody for joining school. John, thank you for joining. Make sure you introduce yourself, tell everybody your buy box, get to level 2 or level 3 so you unlock thousands of dollars in free education. And then finally, we got some people to congratulate. Jason, congratulations for getting your next deal. Your card will go out in the mail shortly. And Michael, congratulations for getting your next deal. We will send out a card. Folks, if you don't know what these are the black cards. You can get one of these for me anytime you close a real estate deal. If I helped you in any way, maybe it's just an inspiration, maybe it's watching the show, I will send you a black card. And if you get your first deal, I will send out a golden ticket. You can only ever get one golden ticket, but hey, you can get as many of these as you would like, folks. It is fun out there. I hope you enjoy these daily financial news. Remember, Steadily is a sponsor. They are the platform for Landlord Insurance. Go get your quote. Go check them out. See if you can get better coverage at better rates. And, of course, let me know how they do. I'd love to hear from you. And I guess one more thing I'll call out, McDonald's. I almost forgot this one. McDonald's missed on revenue, reported the largest same-store sales decline since 2020. Again, I think McDonald's is screaming recession. I think when McDonald's sees same-store sales down roughly 4%, that is a problem for the economy, and we need to see where we go in Q2. Folks, like, subscribe, comment. Don't forget to check out One Rental at a Time on Spotify. The videos are all being put up there if that's where you'd like to consume some of your content. Take care. Later.